Everybody, Don DeRosa here with another question off of the internet. This is a random question that I pull off some Facebook page or some internet site somewhere and give you my take on the question, because there's lots of questions out there on real estate. So this is my question, and this question comes, in fact, the same guy that I did another video on ask another question. His name's Bershawn Zimmerman, and he came from the site Subject2 or Sub2 Nation off the Facebook site. So if you want, go check them out. Yeah, that site is, by the way, run by Jeff Richmond, a friend of mine. So if you want to go get some good information on that, feel free to go check that out. But his question for today is, does owner financing and seller financing mean lease option? That's a good question, because a lot of people don't understand that. So does owner financing or seller financing mean lease option? Well, the short answer to that is yes. Okay, but you need to, I can't just give you a yes. That does mean owner finance, because the owner is allowing you, well, yes and no. The owner really isn't financing it. They're offering you a lease with an option to purchase it. So there's really no financing there. There's no interest rate. There's no principal and interest. You don't get any ownership of that. So the technical answer to that question is no, it does not include that. Although a lot of investors will consider that technique of lease optioning a property a form of owner finance, even though Webster's definition of it is no. We in this industry tend to lump that into that category. But true owner financing or true seller financing is where the seller will become the bank to you. Like when we go down and buy a property, you go down, and I'll use any big lender. Let's use Bank of America, for example. You go to buy a house and you don't have the cash to buy it. That means you got to go get a loan. So you got to go down to some form of a lender, some bank, right, and apply for a loan, etc. Well, let's just assume we do it through Bank of America. When we do that, they're going to make us or require us to fill out a promissory note and a security instrument. So depending on the state you're in, they could call it a security deed in Georgia, for example. You could call it a deed of trust, or you could call it a mortgage in other states. But they all basically mean the same thing. What it is, it's an instrument that puts a lien on the property. Especially if there's a loan on it and there's money to be paid back to whoever the lender is. So in true owner financing or seller financing, the seller would issue you some form of note that you pay back. Now that note spells out all the terms and conditions of the purchase of that property. And those terms could include an interest rate or not, a payment. It could any kind of balloon payments or terms, whether there be a prepayment penalty. Any term like that would be included in that note. And then in most cases, they will also, in addition to the note, they will also put a lien on the property, which basically says if you fail to make those payments under the terms, we're going to exercise our right with this security instrument, whether it be a mortgage, deed of trust, or security deed. We're going to exercise our right to go out and foreclose on that property and take that property out from under you. Because without that document, if you just did a promissory note, the bank, if they didn't have a lien instrument like a security deed or a mortgage or a deed of trust, the bank would have no recourse to take back the property. They couldn't foreclose and take back the property. All they could do is sue you for breach of that note. So in all closings, the lender, whoever that may be, will put on there a lien instrument. So you have two documents, right? In some states, depending on whether it's a judicial state or a non-judicial state, meaning a foreclosure is a lawsuit, or in the state of Georgia, for example, we're a non-judicial state. When you go to close and you sign documents at a closing, you will sign a document that is what's called a waiver of borrower's rights. Now, every state in the United States has a judicial foreclosure process, meaning a lawsuit process. It's usually really lengthy and really long. That's why you've heard people take a year to foreclose on, or sometimes even longer. That's the judicial process. But there are other states around the country that have what's called a non-judicial process, and Georgia happens to be one of those. So depending on where you are, you'll have to check to see if your state is a judicial and a non-judicial state. In a non-judicial state like ours or mine, at the closing table, the lender requires you to sign what's called a waiver of borrower's rights. And basically what that does is that it waives your right to a judicial foreclosure. So now it's a much, much shorter process. So getting back to the question here, is a lease purchase and owner finance the same? No. A lease purchase is not really owner financing. It's really just a lease with an option to purchase it. Whereas owner finance, whatever form it takes, you could do it in a wraparound mortgage. You could do it in the form of a true owner finance when the seller doesn't owe anything on the property and they want to owner finance it to you. You could do it in a subject to format. You could do different techniques, and those would all be considered owner finance. Whereas a lease option, even though a lot of investors, even myself, I lump that into the owner financing side, it's truly not the definition of owner financing. It's just a lease with an option to purchase. So hopefully that cleared it up. If you have any questions on any of that, please put them in the comments down below. I love to answer any questions or any comments that you may have. If you like this, please give me a thumbs up. And if you'd like to see more, hit the subscribe button and the little bell so it'll notify you when I post more videos. Until next time, thank you very much. Have a wonderful day. Happy investing.